The hardest moment I've experienced in a scale-up is at the start of Qonto when I joined back in 2019. And on day one, I walked in and found that the entire finance function would be managed by just one finance manager and myself. And we were tasked at the same time in building the business plan and the deck to start like a Series C, while at the same time hiring quickly a full finance team around us and setting up like founding processes and tools that the company needed to scale. And it was absolutely overwhelming to discover that every priority felt very urgent. And at the same time, the resources were actually quite limited. And that was also the reason why we needed to raise.
Hi, Chloé. Super excited to have you today on our Stacks podcast. Very excited for this conversation. I think Zainab from General Catalyst introduced us. And when I had first chat with you, I thought like, yeah, that would be fantastic to learn a little bit more about your experiences, because you work at probably two fastest growing and very interesting scale ups in Europe, Pigment and Qonto. And you were a very early finance person leading the finance teams in those companies. So super interesting to learn about your experiences, insights that we can share with others. Maybe just to get things started, both companies raised a crazy amount of money over, I don't know even how much, like $700 million. And you built finance teams at those companies. What do you think, sort of like, what's the biggest learning from fundraising you've got from those experiences?
So first, super happy like to join today, especially when you invited me. With my love, for Office of the CFO software, I was hoping to bring value, to those listening to us today. And to answer your question, the key learning from raising several types of rounds, whether small or bigger, is that there's many steps in the process. Some are hidden that you're not going to see in the media, which is, preparing like a data room, which is taking like 3 to 6 months, to get things started and ready. And there is, the public part, which is what's visible, the visible part of the iceberg, which is way faster. And it's about communicating with investors on the roadshow and sharing your equity story, business plan and stuff, which doesn't take much time. In general, it's a pretty fast process. So I think it's really thinking this process in terms of steps and understanding that it's going to take you like between 6 months and a year.
Yeah. No, that's definitely not an easy and fast process with a lot of data that's actually going into this. What do you think something that most founders getting wrong in the fundraising process?
That's a funny question. So I'll probably answer this question the way around, which is most founders get right about raising funds because in general they know the process very well. Even those who haven't been through that, in general, I find them very knowledgeable because they have talked to many people about the process. But to answer to your question, one thing that most founders get wrong are what I call the hidden efficiencies, which is underestimating the time it takes to gather data and check, data quality and coherence across the board. And it slows everything down. It slows, the time it takes to make a doc analysis, to check outputs. But don't get me wrong, they are all aware that data quality is at stake in general during a fundraising process, but they most often assume financial data is ready and available. And, you can just push one button in one click and get the desired output. And in my professional experience, there's no daily routine task that doesn't take time. So you need, to take buffers across the board to make sure that your team has enough time to gather, check, um, and make sure, the outputs are 100% correct. And otherwise it slows everything down.
Totally. Behind every leader, there is a personal story. I would love to actually learn a little bit about your story, where you grew up, and how what was sort of like your progression, how you got to the roles where you are right now.
So I grew up in Paris, France. Studied finance at Sciences Po, which is an international school here in Paris and in the US. So part of the curriculum was in the US. I was in a business school in the US, and everyone was applying to either consulting firms or investment banks after university. So I kind of followed, that path. And luckily was accepted at Goldman Sachs for my off-cycle internship at the end of my master's too. And luckily, I stayed there, as a first job. I started in equity research on the sell side, and then went to asset management as a trader on the buy side, and was lucky to be exposed to the blockchain technology at Goldman, because we were doing some proof of concepts with the technology back in 2014. So very early on, in the kind of cryptocurrency blockchain buzz. And my future husband was working at McKinsey in Paris. So I had to kind of make a decision between London and Paris at some point after, 4.5 years of taking the Eurostar back and forth. So as far as I'm concerned, it came down like to love as my professional lever, I would say, literally. And I'd like to say that there are 3 considerations, to make a decision on a professional move and whether you're going to work somewhere or quit a job or change roles. 1, personal matters, including love, of course. 2, kind of recognition, salary rise, promotions. And 3, new job opportunities. And for me, it came down to love.
So I also was at equity research on the sell side. So incredible experience. I think it just preps you for so many other things that you do in the career. Definitely was the case for me. But moving from Goldman Sachs, which is like absolutely fantastic firm, to startup that probably doesn't have that much traction. It's just like a massive decision. How you made that decision? So like, what sort of like what was the consideration? How you were thinking about this decision at the time?
So my consideration was to start from scratch, like in the startup environment, and learn how to be like a kind of a head of finance. So I was looking for an opportunity in Paris in the blockchain space, and found an American founder who had just started a blockchain company in the B2B software space. And he gave me the opportunity, to learn it from scratch. So I was the number 1 finance person and learned, the whole finance value chain thanks to him. So that's how it worked, a mix of exposure to like a certain technology at a certain point in time, and love, of course, to, move from London to Paris.
Yeah, being myself in a few scale-ups, I can imagine how intense it could be. What was the hardest sort of like professional moment you faced in scale-up?
So I don't think it was at that time, because I think the learning part is fun, in my view. As far as I'm concerned, like the hardest moment I've experienced in a scale-up is at the start of Qonto when I joined back in 2019. And on day 1, I walked in and found that the entire finance function would be managed by just 1 finance manager and myself. And we were tasked at the same time in building the business plan and the deck to start like a Series C, while at the same time hiring quickly a full finance team around us and setting up, all the founding processes and tools that the company needed to scale. And it was absolutely overwhelming to discover that every priority felt very urgent. And at the same time, the resources were actually quite limited. And that was also the reason why we needed to raise. But, ultimately, you always found solutions, and I navigated that step in my professional career by focusing on priorities, listening to what the priorities were, and breaking down, the workload for myself, but also for the team in manageable steps. And communicating clearly, but which is, key to any role as a leader.
Yeah, so you mentioned fundraising. Again, I think this is the topic that probably a lot of people interested about to hear, especially because finance is at the later stages of the fundraise is sort of playing a critical role as well. So I wanted to spend a little bit of time getting your insights on this topic. What would you sort of what tactical advices would you give to founders or to any other people involved in the fundraise on finance teams as well in this markets that are tough, not sort of like for every vertical, but so market is definitely different compared to what it was before.
So back to your question earlier on what founders get right or wrong. I think what I've seen is that they get right at nurturing investor relationships, whether these are current investors or prospecting investors, and keep the communication open and authentic all the time and throughout the process. So it's about really nurturing these relationships. And it's not just about going to the market and making sure that all the funds know that you're ready. And they get that absolutely right. In my experience, all the startups I worked for, they knew how to nurture these relationships all the time. And that also explains why all the fundings round were so successful.
Do you have any interesting stories from those fundraising weeks, months, or So I guess it was pretty intense period. Lots of meetings, probably travel as well. Curious if you had anything interesting to share.
So not so much travel because of COVID.
Oh yeah.
Yeah, it kind of slowed down, the business the business travel part of a fundraising round. We could do that from distance. No, it was just about, I was dreaming, my business plan. I was only dreaming about it, nights, days, weekends, holidays. I really wanted to, in the software space, your BP doesn't need to be that complex, but there's so many drivers that you can, select. And I was obsessed, at Qonto, for instance, by building a cohort-based business plan. And it took me ages, to make the math right. But I found that funny, to be honest. And I learned so much.
Was it like a massive spreadsheet, a massive model?
Kind of massive model, but at the same time, we made it simple so that, the Q&A part wouldn't be too invasive and for us. And it worked out.
Did you find that, there's a difference in terms of, sort of how investors are looking at these models? Some investors may be going deeper into the levers and sort of just what's behind trying to get sensitivity analysis, and other investors looking for other signals.
They all ask the same questions. So I think, as in my view, a good preparation is when you log in the questions, you also log in your answers, and you just, copy paste your answers again and again. You save so much time and you just become efficient, in the Q&A process. Not so much add-on questions on can you build specific sensitivity analysis for us, and not so much question also on like build us a complex a cash flow forecast. These are very simple questions in general, and they're always the same. You just need to know what type of questions they're going to ask, whether these are financial KPI, marketing KPI, sales KPI, product KPI, and you just break down your analysis into categories, and make sure that you have also the support from the rest of the leadership / executive team that you're working with. That's key to me.
Yeah, absolutely. So the next topic I wanted to discuss, which is very exciting, is just building the function, the finance function. Incredibly important. Obviously, you just set the foundation and will very much kind of define how the function will look like in the future. What's the first 3 hires in the new finance team? Who and why?
That's a great question, and honestly, it's a question I'm being asked in every type of finance lead business case. So the first 3 hires, I would approach it like that. First, like an FP&A expert, so not just an analyst, but someone like with 4 or 5 years of experience at least, coming from transaction services or M&A, and who is skilled at building financial models from scratch, and who can have like a quick impact on bringing structure to messy data. And I've seen it as a crucial role for a finance team. 2, I would say a more versatile profile, sort of, finance manager with a broad experience across the finance value chain, who can help at juggling, between operational daily priorities and more longer term strategic topics as priorities shift. And last but not least, have a strong junior FP&A who's going to work in pair with your kind of FP&A expert or manager with strong accounting skills. Most teams underestimate, the need for accounting skills, which are mostly outsourced at start, and someone who can lace between an external accounting firm and the business teams. And it's a crucial role to support the FP&A team that you are going to hire primarily.
Yeah, fantastic. How do you spot great talent early, especially in early stage companies? You cannot go and just get sort of ready talent that is expensive. Yeah, you need to spot the talent earlier.
So I think only look for individual team members that can demonstrate they are problem solvers. So they have strong problem solving skills. So people who will come to you with problems and the potential solutions, but not just problems. So I prioritize the type of candidates because I always found them very optimistic and forward-looking. And they are not just relying on what's on their resume.
So you've done this already a couple of times, setting up the teams. Have you developed any playbooks, so where sort of there are certain steps that you follow, when you sort of build those teams and processes?
So with humility, we all make mistakes when hiring. I think it's the most difficult part of building any type of company. It's true that hiring the right people at start is great, but you're going to make mistakes in the journey. As far as I'm concerned, I try to hire the 3 people in the trio that I just mentioned in that order. And also, I always build relationships that go way beyond work. So I do get very interested into who they are and what problems they can face in their personal life, to be a kind of a manager coach, and trying, just to go over work. And I think that does work, especially in today's environment where, the younger population is very sensitive to that.
Yeah. And these three people that you mentioned, so basically at what stage normally founders should sort of like think about that? Is like Series A? What's the right stage to start building up that foundations?
That's a great question. I think sometimes even before the Series A, having like a founding FP&A profile is useful and can have a quick impact. I would say start to have a team, like with several team members after a Series A or B, but not before. So taking the example of Qonto, we were two at the Series B stage, so a finance manager and I. And we were three at Pigment Series B stage. So two finance managers and I. And before that specific threshold, which is the Series B, I'm not too sure, like you need a full team and you can outsource that, to kind of a fractional CFO.
Mm-hmm. When do you need CFO in the company?
Great question. Not before a Series C, and a common mistake that companies make when building out like a finance team prematurely is over investing in such a role and hiring the wrong person in the C-suite and then needing like to find someone else to replace it. I don't think there is a quick need to have expensive overheads like that and burning some valuable resource that you're going to raise from your Series A or B could be better spent on product and sales, for instance.
Yeah. I'm actually curious, with AI changing so many things, how we work, and definitely adding a lot of efficiencies. Do you think sort of that composition that we just discussed might change, and so companies could actually stay leaner in terms of composition of the finance team as the company progresses through different rounds?
The shape of the finance team is going to change for sure. You'll probably need less analysts. Many junior roles would be fully automated, whether in accounting at first, but also in FP&A as well. But the role of the CFO is going to change as well. I'm not too sure a CFO that doesn't train or isn't curious enough when it comes to AI use cases and tools will potentially be replaced, in the 5 to 10 years. So I'm not too sure what the finance team is going to look like in 5 years, but for sure it's going to be different. It's going to be leaner, and you'll probably have more profiles that will do pure analysis, but not, modeling or data cleaning or things like that. So they'll spend more time on high value added task and less time on a very routine, daily boring task.
Any mistakes founders or other finance people building out those teams should look for in that early stage when you're building the teams, finance teams?
So I think a common pitfall is to hire very junior people that you think are going to work super hard and produce a lot. That pattern, I think, has changed a lot. So because the junior population doesn't want to work that much and also don't want to focus on production only. So I think hiring more senior people, more expensive from scratch is the right decision. Doesn't mean you need to have 3, 4, 5 very experienced people, but your first finance hire must be extremely strong, a great problem solver, and someone who's going to be engaged throughout, the economic cycles, whether it's down or up, and who will remain, steady in nature throughout, these different economic environments. I think that's key.
So especially now, tooling play a big role in how sort of finance function operate. Just sort of like curious how you think about tooling. What are these sort of like which parts of the tooling the team should look into first? Again, without sort of names of the companies, but more like which part of the stack I think is foundationally important, where you start, and then sort of like how you progress over the time.
I think it's going to be a biased question to answer to. If I were in your seat, I would say stack and an accounting close software. And if I used to work for an EPM company called Pigment, and I'm pretty biased toward Pigment, as the number one tool that any finance team should use. But beyond that, and that said, I would say that most companies generally start with an expense management like payable software, because this is where most of the transaction volume takes place, reconciling invoices with payments and banking transactions. This is what I've seen. And then adding some more tools after that step, including a treasury management solution, an accounting close solution like yours, a billing platform with a revenue recognition solution. So there's no right order. I think you can start with any of these, whether depending on your business pains. But ultimately, if you scale, you'll need all of them. And that's why it's very important to understand the full office of the CFO value chain to see whether you need a kind of a one-stop shop approach or a point solution approach where you'll find and cherry pick, the right solution for any business problems that you face. I'm team 2, so I'd rather I'm cherry picking the solutions rather than looking for a one-stop shop solution. But I've seen both approach in my career, and I think we'll have some more Office of the CFO softwares coming in the next few years as well through, AI.
What's the mental model in terms of what to automate and what humans should be doing?
So I think it's a mix of both. We are not going to replace humans 100%. I believe AI won't own 100% of the process, but you are going to augment your finance team, making sure that they focus on what matters, making sure they focus on kind of a continuous decision-making process and being forward-looking rather than being overwhelmed by transactions, data, reconciling, matching. So again, it's this tension between urgent priorities and longer-term strategic priorities and targets, and making sure that you can juggle between both without any pressure.
The other topic I'm super excited about myself and would love to sort of like hear your thoughts about is the finance function in the future. If we imagine ourselves 10 years from now, how do you think what would change, how the function would look like?
Not too sure what the team is going to look like as a whole in 5 or 10 years, but I'm telling you that any team member would have to continuously upskill through regular trainings, hands-on demos where they see new products and understand, the ROI on their business. Also gathering customer feedbacks, which is something I love when selecting a new tool to implement. And last but not least, always running proof of concepts to understand how you are going to apply a specific technology to your business. So it's definitely a change in mindset, which could be in constant experimentation and testing new things to stay ahead, basically.
Yeah, and AI obviously will play a huge role in this change. What do you think? What's the one workflow use case that you think AI can completely take over, and one workflow that will be like fully automated in your opinion?
Straight to the point, yours. The accounting close process, which is extremely repetitive for teams, extremely invasive because you at day plus 10, you're done with your accounting close, and then you need to jump into the next accounting close, so it never stops. It takes your team energy, it consumes your team energy, and definitely the management of payables and receivables from an initial order intake to the different procurement steps throughout the final payment and reconciliation. Optimizing and streamlining all this through AI is going to be done without a human intervention and fully owned by AI powered tools. And I already see that. We are 50% done, I would say. But I think you made the right decision in tackling that business process, because for sure it will be solved through AI.
So as we speak to many different finance leaders, professionals across US, Europe, there is like a different spectrum of excitement about the AI. So curious, like, do you think that in general industry is ready for AI's transformation and change there, or finance is pretty skeptical and it's going to be the change will be happening a little bit later than in other verticals?
You'll probably tell me what you see in the market, but I hear many finance teams are still holding back because they are waiting to see which technologies or tools will prove the most effective for their business, and how much automation, will impact their work. There's an explosion, of course, of AI tools dedicated to finance, from generalist conversational platforms, such as Dust or Perplexity, applied to the corporate world, to very niche, specialized point solutions targeting specific finance tasks. And with this explosion of tools, they are waiting to see some consolidation, to see who's going to win before making the investment. Bear in mind, all these tools are expensive, and before you make a budget investment, you need to understand the ROI of all these tools. So I think they are in a wait-and-see mode, but it shouldn't last, in my view.
But if I'm a finance leader, how should I prepare for the next 5 years? What should I do with my team?
Upskilling. Talking to other teams, like in other businesses, looking at what others do, talking to customers of your targeted solutions that you want to buy. For me, it's about making sure that you continuously learn in the market, and you just don't rely on what's existing for your team today, from the junior person in your team to yourself.
That's excellent. Yeah, 100% agree with that. So I have a few questions where I would love to sort of like get quick, short answers from you. One book or resource every startup finance should read.
I'll probably have a different answer to that question. I studied, at Sciences Po, which is a kind of a political science school. And there's one book that I loved, that I read 20 years ago already, which is called Les Vertus de l'Échec. So in English, it's The Virtues of Failing. And interestingly, applied to business like ours, it does explore how failure is not just an obstacle, but something that is key driver to learning and to grow. And in the context of fast-growing startups and businesses, for me, this book offers like a powerful perspective on how you not just learn from successes, but also from failures. And it's always an opportunity for me to build resilience over time and innovate more effectively in the future roles that you are going to embrace. So very French book written by Charles Pépin, which is a French philosopher, but with a strong business meaning for me.
Fantastic. I'm actually adding it to my to read list. What's the most underrated finance skill you've learned?
Resilience. It's not easy every day. Again, there's a big tension and pressure between urgent priorities that shift every day, basically, and longer term priorities. And building resilience over time is really underrated, but essential to grow and in your career as a finance leader.
My next question was around sort of like what was the boldest career move that you made so far from your previous answer. I guess that's sort of like I assume it's transition from traditional investment banking into the startup world, right?
So that would be my first answer, but also joining my first startup, I invested my money into the company. So I was also part of the funding round. I lost all of it, but it also gave me a deep understanding of high risk, high reward philosophy that I love so much. And I'm very happy I went through that because I wouldn't have taken risk otherwise. So I would do that mistake again and again because you learn every time you invest in a company.
So the biggest myth about the head of finance, you're not just getting paid a lot, but just like you have to pay your own
You
money.
have to pay to work.
to work.
It's there's a ticket price to work at certain company. No, but it was a personal decision. Like no one asked, but it was for me like a way to start my life, in this startup ecosystem.
Who's one person in finance you truly admire and learn from, and why?
It's going to be a pretty basic answer. You might be disappointed, but I'll name Ruth Porat, which is the CFO of Google Alphabet, for three reasons. First, she's one of the scarce women that went to the top in such a large global listed company. She's known for her resilience. She has twice survived to a breast cancer, and that's something that I went through as well. So I find her career path super inspiring in that matter. And what we hear from her is that she has a sort of survivor's urgency in decision making that I think is adding tremendous value to Google. And that's also why she managed the pandemic so well through like her forward-looking and strategic mindset. She always think about the future and not about today. And that's why I think she's been recognized so many times as one of the best finance leader in the world. And if you want a second example, the CFO of Louis Vuitton in France, called Jean-Jacques Guyoni. And for me, he embodies the value I respect the most. Back to what I said in your question earlier, which is resilience. So, the luxury industry is going through tough economic cycles and tough ups and downs. And he's, in my view, one of the best manager to steer LVMH through this changing global demand in the luxury industry, while all other of Vuitton's competitors are suffering a lot.
Thank you so much, Chloé. Really enjoyed having this conversation with you. Lots of fantastic insights. I think that our listeners will learn a lot, and hopefully we'll take away a few things. And so we'll build more successful companies and more successful finance teams. Thank you.
Thank you so much, Albert, for the invitation, and hope the the public today is gonna learn as much as we're learning, our job by doing it every day.